Hello, Chad Franzen. Welcome to the Kingdom Finance Show. I'm glad you're here. On today's program, we're going to talk about the government shutdown and what it means for you as an investor. Let's jump in. As many of you know, on October 1st, the U.S. government shut down. And I want to take some time today. We are recording this on October 8th, October 9th. It'll be released. So we may have more information between now when we record this and when it's published on the Kingdom Finance Show. But wanted to come to you and give you our perspective on it and kind of what our team at Wealth Builders Investments is advising families on of how to view that, and just give you some Kingdom Finance perspective on how to view that as an investor looking to make wise decisions with your businesses, your ministries, and your money. A government shutdown, really, the essence of that, just so we can define what that is on today's show, is it's when Congress fails to pass funding legislation. And so it's for the upcoming federal fiscal year. Of course, that has become very politicized between Democrats and Republicans. And I really just want to explain what that means to us as individual investors and business owners. There's actually been, going back to 1976, 21 government shutdowns where Congress was unable to pass a budget for the upcoming fiscal year. And oftentimes what's happening there, and I'm not a politician, but it's, each side of the aisle, Democrats and Republicans, they believe they have some form of leverage, some angle, some advantage to gain from kind of the political posturing of not passing a bill on that. We'll speak a little bit to that on what some of those things are that they're looking for on that. But I also want to talk about just the economic impact, number one, and then two, what is the investor impact? What does this noise mean? The government shut down on October 1st, and we're now 7-8 days into that, a few days further along once you see this on the Kingdom Finance Show on that. So again, Congress is required to pass, I believe it's 12 appropriation bills. They need to be signed into law by the president. It comes from Congress in order to continue funding the government. And there's different subcommittees that are involved in that as well. So again, I've got some statistics here. I'm going to talk about economic impact, one, and then investor impact on that. Back in 2013, the House and the Senate were in the standoff over funding over the Affordable Care Act, the ACA, which you may read about even in current news. And the government was shut down for about 16 days back in 2013. And just looking at some stats here, the market, the stock market, it had some down days during that time period. Again, this was October of 2013. But overall, the equity markets were pretty resilient in the face of some government uncertainties, and pretty much took it in stride. The S&P 500 back in October of 2013, during that shutdown, actually came out of that positive, up about a little over 3% during that 16-day shutdown. So actually, the stock market performance during government shutdowns is surprisingly not terribly negative. The markets appear to kind of look through that. One thing that does continue to operate, that's an important part of the economic engine and the investment engine, is the Treasury market. So the U.S. Treasury does continue to operate. It is generally not going to be impacted by a government shutdown like what we're facing. The U.S. Treasury Department still makes its coupon payments during a shutdown, and it also continues to hold its debt auctions. Traditionally, those operations are considered essential. So those do not shut down. That would be pretty bad if Treasury markets, the Treasury Department was not holding its auctions of T-bills and T-bonds or paying its coupons on that. So that's positive to remember that even in an economic situation where the government has decided not to pass a budget, the capital markets, being the U.S. Treasuries, are still operational. In summary, investors should be assured that these shutdowns and the continuation of mandatory services to keep things going. In the long run, I'm going to share some more stats. It's a marginal effect on the economy. There's some stats on how much it affects GDP or the growth of the economy. I'm going to share some of that with you. In fact, I was looking at some research from Goldman Sachs this past week, and they've analyzed that the drag on the economy. Again, we talk a lot about the economy and how that informs you and I as investors. Each week that the shutdown continues, it can subtract anywhere from 10 to 15 basis points of growth from the quarterly U.S. economy. So again, basis points, 10 to 15 basis points would be like 0.10 to 0.15%. So a tenth of a percent, a little more than that on it. So each week that the government is shut down, that's going to have some drag on the quarterly growth of the economy. Now, a lot of this, there's a catch-up effect in that some of that growth, that if people are getting furloughed and things aren't paid, once they decide to pass a budget that's agreed upon, sent to the White House, and signed, then a lot of those things get paid in the subsequent quarter. So much of that lost growth, if it happens in this quarter, it's just going to get made back up in the following quarter. It's not going to not go unpaid like some of the federal employees that are furloughed and things like that. So again, market behavior tends to be pretty muted on that. We will see economic data reports like jobs report, unemployment, the inflation or CPI report. Those will not be as visible because those are going to be delayed in getting that information out. So there'll be a little bit of kind of a blackout period for however long the shutdown lasts on some of those economic reports that will come out. So again, a lot of that was from a study that we were reviewing through Goldman Sachs. The average length of a shutdown is about 8 days, which is about what we're at now. Again, there's been 21 shutdowns going back to 1976, 77. The last one, we mentioned the 2013 shutdown. The last shutdown occurred 2018 and 2019. And that one lasted 35 days, and it is on record as the longest government shutdown in U.S. history. Now, stock market outcomes vary. They tend to not be as negative as what you might think if you read that in the news or in media. 86% of the shutdowns that we've seen, again, there's been 21 of them going back over the last 45, 50 years. 86% of the time, the S&P 500 is higher 1 year after that shutdown. And the average gain in the equity markets 1 year after a government shutdown is a little over 12.5%. So again, past performance, not a guarantee of future results, but we're just looking at history of like, well, how do the markets react from the time a government shutdown goes through its process, whether it's 8 days or 35 days, what do the markets look like a year later? And so, volatility can pick up a little bit. We'll talk more about that in a future show episode. We'll talk about the market specifically, kind of what we're looking at going into earnings seasons, volatility, what are some asset classes to potentially look at in a portfolio on that. Again, during shutdowns, hard assets, gold and silver, those are generally good stores of assets. That has continued to be a good one during the shutdown. We'll talk more about that on the next show. We'll talk about investment asset classes and kind of portfolio structure at a high level on that. You think about, historically, markets are just fine. They're positive a year after a government shutdown. Also, we want to be mindful that we are in the process of interest rate cuts by the Federal Reserve. So we had an interest rate cut in September. And as we've shared on the show, we expect a second one at the end of October. And then when the Fed meets in December, it's a very high probability that there will be a third interest rate cut, most likely 25 basis points or a quarter of a percentage point in September, which already happened, end of October, and then again in December. Now, historically, when we have a rate cutting environment, that is very positive for a lot of risk assets. We'll talk about that in another show, but that has historically been very positive for the stock market, large cap, small cap, general equity markets on that. And we do expect that will be a continuing trend on that. And really, the market has some momentum right now. And, it's, the ongoing government shutdown really has not affected it as we've looked at kind of where the various indexes have been on that. I want to share a couple other things on today's show about what's happening with the stalemate. We're now in the second week at the time of this recording of the shutdown, and there's been different competing funding proposals going back and forth in the Senate. A lot of the impasse revolves around healthcare and that ACA rule that we talked about from back in 2013, or what are called subsidies on that. Democrats want those extended now. Republicans generally want to decouple or separate the healthcare ACA subsidies from the immediate funding of the budget to send to President Trump to sign. Now, I mentioned that the IRS does the government will furlough employees. I was reading a note, the IRS is set to furlough nearly half of its staff, about 34,000 employees, to cut back operations such as phone support and many kind of home office functions during this shutdown. So there is going to be some disruption in some of those agencies on that. Air travel is seeing some disruptions as well, as far as staffing gaps in air traffic control and things of that. So you could see a few flight delays here and there on that. Again, the economic report from Goldman Sachs, that a government shutdown, as far as dollars for the U.S. economy, it's about $7 to $15 billion per week. Now that's a huge range, but let's call it in the midpoint, somewhere around $10 to $12 billion per week of a hit on the economy. Again, there is this whole catch-up effect that once things get resolved, you're going to see those dollars just come right back the following quarter, which for us would be most likely the first quarter of 2026. Republicans have floated a continuing resolution extension through November 21st. That's been met with resistance with Democrats who want more of what's called a continuing resolution or a CR extension. The Democrats are lobbying for one that goes to October 31st. But again, the main contention that I'm hearing is kind of around these healthcare ACA subsidies being in or out of that. So again, I hope that's helpful. Again, the main takeaway here is the markets, the bond markets continue to operate. The equity markets actually have a lot of momentum right now, just with the macro environment of where we are with earnings, particularly AI-driven earnings, with capital spending by corporations, which we'll talk about on next week's show. And then also just with the interest rate cuts happening, that's really positive for the overall markets. We've seen a lot of the risk assets continue to do well, as well as safe haven assets like gold and silver. So all that being said, muted impact for investors. I do think it's important to keep an eye on as it prolongs, but I really don't think it should, as an investor, make you make major pivots or shifts in your overall, what I call, asset allocation strategy for that. Again, if you're just looking to go out and day trade, tactical, short-term, in and out, capturing profits here and there, that's certainly one strategy. It's not one that we employ at Wealth Builders Investments. Most of the investors and families and organizations that we consult and work with, we're looking at more like, hey, how do we buy great assets that we want to own for a long time? We understand the asset class. We understand the business model. We understand the earnings cycle for those companies. So as there is volatility, which I think we could see, October is historically a month that has some more volatility on that. We'll have a lot of earnings coming out in October, which we'll report about on the show. I would personally, I'm not telling you what to do, but I would look at any volatility we see in the month of October as just a window to be able to get in some of the asset classes that you want to own based on your overall financial plan on that. So I hope that's been helpful. Again, today, really the idea was, hey, what do we need to know about this government shutdown? What's the impact on the economy? Can we quantify how that impacts the economy? Again, a lot of it is going to get caught up once things get resolved and passed. And then what does it mean for investors? Overall, it does not have historically a dramatic downside risk as far as the downside volatility in the equity markets on that. Certainly valuations are very high in a lot of asset classes, and that's something you have to be mindful of when you're creating an overall investment strategy of, hey, do I have the right amount of liquidity for my business, my ministry, my family? And are you properly diversifying across a lot of different asset classes? Right? Looking for good assets that you want to own long term while still being in line with your overall risk tolerance and having the right amount of liquidity. If you're a small business and you're expanding, or a ministry and you have budget expense needs, you don't want to have that money tied up in crypto or equities or even real estate where it's a little more illiquid on that. So I hope that's helpful. If there are questions you have and you're saying, hey, Chad, we'd love to visit with you and your team on how do we evaluate what our current financial plan is for our business, our family, or our nonprofit. We've got a great team at Wealth Builders Investments. We'd love to connect with you and just help guide you through that process of how do I evaluate aligning my faith, my values, my worldview with how I manage resources. And also, as we've talked about on today's show, how do I navigate what's happening in the economy with interest rates, the government shutdown? How does that inform what my investment policy will be for myself and those organizations that I help steward? Well, hey, Chad Frantzen with the Kingdom Finance Show. So glad you were here. I hope that was insightful. Try not to get too technical or heavy into all the internal workings of the budget and what's happening in Washington. But again, stay tuned. Please like and subscribe to the show. Please pass it along to friends and colleagues that you think would benefit from gaining clarity on what's happening on the world economic stage and aligning your money with your faith. I'm signing off for this week's show. Please connect with us online if you would like a personal financial assessment. It's complimentary. We've got a team of advisors and certified financial planners standing by to connect with you. Best way to do that is you can reach out to us at wealthbuilders.net/invest. We've got a free download report, and you can connect with myself or a member of our team to talk more about your personal financial roadmap and how you're navigating making wise financial decisions. So thanks again for being here on today's show, and we will see you next time. Thank you so much for joining me today on the Kingdom Finance Show. If you enjoyed this podcast, please subscribe and leave us a review. It really helps to get the word out. For more resources on becoming a Kingdom investor and to connect with us directly, visit our website at wealthbuilders.net. That's wealthbuilders.net. We'll see you next time on the Kingdom Finance Show. The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Authentic Counsel, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine risk factors and other information contained in the memorandum.